Good morning, VIPs. How you doing? It's Monday, May 1st. We have lots to cover and lots about our schedule changing. Just want to let you know, starting today for VIPs, post-market wrap every day at 4 p.m. We're going to have post-market wrap with Ascending Capital, emerging hedge fund I'm associated with. We're going to be covering how the day went. That's going to be every day, 4 p.m. And again, just a reminder, every week, Wednesday, 10:30 a.m., we have Tuttle Trades. It's going to be Tuttle Trades episode 3 this Wednesday at 10:30 a.m. And we're going to start, I've been talking about this for a while, but we are going to start a new segment with Rex on Rex Trades. I think the first one's going to be Thursday at noon. So stay tuned for that. A lot going on. So first, let's take a look at the macro and the bank situation. You see here, First Republic is halted. Last trade was actually 189 by 190 in pre-market. Not the 231, or was it 230? No, these are late prints. It was actually 189 by 190. I was surprised that people were buying it this morning because they were taken over by JP Morgan. And in the press release, I didn't see anything about the equity being saved. Usually when this happens, the equity goes to zero. So anyway, now it's halted. Hopefully you guys avoided buying FRC in pre-market. Now, look what's happening. First of all, over the weekend, it was rumored that JP Morgan was too big, deemed too big to fail to qualify to get more deposits. And it was rumored that PNC would get the deal. Now, ended up JP Morgan got the deal. And they're going to be adding $500 million. They're saying it's going to be accretive to earnings to the tune of $500 million a year. So what's that mean fundamentally for the stock? At $500 million a year, they trade at a 10 PE. You can see that here. So that's $5 billion of additional value. And with about 3 billion shares outstanding, you can say maybe it's worth $2 a share fundamentally, but the stock is up $6 a share. Why? So I think the reason why, and by the way, this is significant. It's not only up $6 a share, but it's breaking above 144, which is a key area of resistance. Look at this. You can see it on the chart here. Resisted in March, resisted in January, resisted in February multiple times. It's actually at a new 52-week high. Why is it breaking 144 when you only get $2 of additional fundamental value from this deal? I think the reason is because there's an expectation that JP Morgan was too big to grow. They got $90 billion of deposits from First Republic Bank this morning. They're assuming $90 billion in deposits. And I think the calculation might be the Feds are playing, right? They're letting JP Morgan have the good deals, even though they're big. Maybe perhaps too big because they can't be over. It's like 10% of deposits, whatever, some rule or guidance there was. They seem to be breaking that guidance. And JP Morgan seems to be the favored bank to take advantage of these regional bank busts. I think that's why the market is saying, let's take it over this resistance level of 144. Now, if you look, you got to go back. This is a multi-year chart. If you break 144, man, that's such a, if this 144 holds in the first hour of the day or so, that might be support. That might be an opportunity to get in on the stock at 144, but potentially this could swing to about 150, 154 in the coming days or weeks. So JP Morgan, something to watch. Now, the other thing to watch is PACW. I noted last week that PACW, the regionals were doing pretty good last week. The regional banks, the regional bank index, KRE, KRE was up, but guess what? PACW was down. PACW was the worst performing regional bank on my radar, and it accelerated when it became clear that the FDIC was going to take over First Republic. Then you saw PACW accelerating. And I lived through 2008, 2009, and every time a bank fails, they go for the next one. They go for the next one. They go for the next one. And they're basically testing points of weaknesses. You can see in that right now, it's spiking. But this is the next one on the radar, and that's proven by the price action late last week and early this morning. Doesn't mean the shorts will be successful. Doesn't mean the hedge funds or whoever doing this will be successful. But the idea is let's find the weakest bank that's remaining. There may be news that just came out. Potentially they put a press release out affirming because they know they're in a bad spot. Maybe something just happened, actually. But they were definitely in a spot where they were being targeted. Potentially a press release just came out. But in any case, the idea is to break the next bank. And the thing is, when the stock goes down, it starts rumors in the market and depositors get scared and it becomes like a self-fulfilling prophecy. And that's what they try to engineer every time the funds come in and they short a regional bank. So beware PACW, potentially the next bank to fail. And it took like over a month after SVB to reach First Republic. So if it does fail, then it could be a period of time. But there's a spike there. I don't know if the news is shown on my feed yet. Let's see if it does. But even if there is news, I wouldn't call this over, because theoretically every bank can go bust. Okay, it doesn't matter how strong your balance sheet. If there's a run on the bank, it can go bust. And one of the mechanisms that they can spark a run is by crashing the stock on purpose. So something to be aware of. All right, other things. The rest of the market, pretty stable. You see the regional banking index, pretty stable. The only thing of note, well, you see Bitcoin down, which it was a little upsetting for me because I do have Bitcoin as a hedge, and especially with anything related to regional banking crisis, debt limit, USD as reserve currency. That's why I have both Bitcoin and gold as a hedge. Gold is working this morning. Bitcoin isn't. I don't know the specific reason why gold is spiking this morning. Is it related to the FRC failure or not? I don't know, but you see it's above the 20 DMA. Very volatile, a little difficult to play. So I'm just holding both of these, gold and Bitcoin, as a hedge against some sort of black swan related to debt, bank bust, or U.S. Currency situation. All right. So that's the macro overview. I do want to let you know Wednesday at 2 p.m. we have the Fed decision on interest rates. So that's something you got to be aware of. And in the meantime, QQQ, SPY, they look stable. They look strong. They look good. They're over all the key moving averages. I don't buy it for the long term, right? That's why I'm very careful, and I'm kind of in a red alert status for the fund I'm involved in. But and I have like gold and Bitcoin hedges. But in any case, for the immediate term, things look pretty stable. Things look pretty good for stock picking. And hopefully you have to be aware of the FOMC decision on Wednesday. But for the time being, everything's good. So let's go to the top of our list on individual stocks. What stocks we're going to be focusing on based on catalysts and technicals. All right, so top of the list, CYH. CYH, this was a tuttle trade from episode 2 last week, one that I loved and I've been in. Earnings are today after the close on CYH. And just a reminder, the levels on this, look at this, pretty clear at $6.95 is your target 1, and target 2 up there around $8. But and RSI pretty low, right? We have all the peers doing great. The peers are THC, HCA, and UHS, those three right there, with great earnings and nice charts. So probably the earnings will be good, but it's earnings report. So you got to be careful about that and manage your risk going into this report, unless it's something you're just holding long-term as part of a diversified long-term portfolio. But if you're trading this, you definitely got to manage that risk. I'm hoping, and I think there's a good possibility it'll actually hit this target 1 before earnings, $6.95. Okay, I find it highly unlikely we'll break that before earnings. And if it's a good report, maybe quickly you're spiking to $8 and after hours tonight. So something to watch. The earnings conference call is tomorrow morning on CYH. Okay, another one, SOFI. So SOFI here, they beat top and bottom slightly, and they guided their EPS 3% better than expectations. So 3% better, the stock 6% up. So I'm not like chomping at the bit. Oh my God, we got to jump on this. But I did note on the chart that 650 was very strong support. Let me see where I found that earlier, because I was earlier this morning. I documented 650, and now I can't find exactly where I found it, but I did document 650 as support. And then this morning, it just kept bouncing off of 650. So this is pretty strong. I don't love it. Banking sector, possible recession coming, but they're growing very quickly. And the implied PE is about 20 to 25. So not necessarily terribly expensive. So if it holds at 650, you have some pre-market resistance levels here that are kind of set at like 670, 695. Let's see what else we got if we go further back. Maybe 750. Probably not today, but maybe as a swing. Possibly all the way up at 8. We'll see. It's above all the key moving averages, which is good. And then, of course, you have this support down here, the gap support at 630 in case 650 breaks. All right, so that's SoFi. Celsius is still on our radar. What is the earnings on this? So this one was perfect trade we gave you last week, but I'm still monitoring it. So earnings are going to be May 8th in a week. So we gave this to you last week when it broke the 50 DMA with the 200 DMA target. And you can see it happened basically almost twice, right? Actually, I sold it here at the top of this candle, April 26th. And then again, it hit the 20 DMA. Wasn't watching it. Should have. Should have picked it up again. And then again went and touched the 200 DMA. So this one looks beautiful right here. I'm expecting a good earnings report. Of course, it's quote unquote overvalued. But in any case, it's right at the 20-week moving average. So I think it's going to take, I'd be surprised. I'd be disappointed if it broke above this 200-week before earnings, because I want to see earnings to validate that it's going to, it's justified to go much higher. And if people are going to be speculating ahead of time, well, that I won't like. Actually, it gets rejected at this 200 DMA and makes a move back towards support and give us another chance to get in before earnings. If the earnings report is good next Monday, this chart is beautiful, guys. If the earnings is good, you can break 96 and make a move to probably around 102 is the next resistance I see. But again, it might take an earnings report unless the channel checks are so strong that you're going to have enough institutions front running this earnings report. And the channel checks are strong from data I'm seeing that people are sharing on Twitter. So I guess it's possible. I just hope it doesn't happen to give me a chance to get back in lower. So that's Celsius. Now we're going to do some follow-throughs on follow-through monitoring on Atom, AUGX, LAZR. I like all of these. So Atom had that big deal with STM. It's got like a 30 days to cover the short position, something absurd like that. So the target is 850. RSI is getting a little hot. So there was support levels, I don't know, maybe about 750, maybe another one here at about 730. But 850 is going to be the target after this massively important deal with STM. Now, I actually read the transcript on this, the conference call transcript. And, we did interview Dan Carlson on this, and I'm going to see if we can find someone to do a full presentation on Atom. But I did read the conference call transcript, and there are some risks here, right? And they note it. It's not like this STM deal automatically means they're going to get massive orders. There's still milestones they have to meet in terms of production and things where STM has to be satisfied with it before it ultimately gets to commercialization and production. So it's not like a shoe-in that this thing is definitely flying and going over this 50-week moving average at 880 and then making it over the 200. That's not a guarantee yet. There's still some risks here. And with the RSI kind of a little bit stretched, maybe this will get rejected at 850, hopefully in a way, and then we get a chance to buy back lower as it goes down to the support, and then we can get in again. So we'll see, but 850-ish is your support level. I think it was like 880 if you look at the weekly candle. So maybe resistance levels there. AUGX, continue to monitor this now. AI healthcare play. I love this with the deal with HCA. I think this gap is going to hold. I don't think we're going down here. I think your support levels are around 275, 280. And I'm looking for like 340 to break in the coming weeks. Maybe it takes months, but in the coming period. I just don't think that we're filling this gap. That was too important of a deal with HCA. I think they bought shares, if I'm not mistaken, in AUGX. Plus, this AI product that they're developing with them in healthcare is so cool. You got to read the press release. It's really amazing. So AUGX is still high on my watch list, looking to buy supports and sell resistances on AUGX. LAZR, an important one here. When is the earnings report on LAZR to be careful of? May 9th. Okay, that's next week also. So be careful. LAZR coming up, especially because what was the other one that had Mobileye, right? Mobileye related to autonomous driving had a bad earnings. So now LAZR related to autonomous driving, just be a little careful about that ER date next week. Now, before the ER, we're now above the 20 DMA. And here we also have like something insane, like 20 days to cover, something like that. It's a 30% short position. All right. So this is your support here at the 220 DMA. You have resistance right here at 640 and then 7-ish right there at the 50 and 200 DMAs. I really like this. I'm going to be watching this very closely. If we can bounce off that support, prove that support again 2 days in a row. In fact, you can make an argument it's already triggered. Why do you have to wait for that support to hit? Maybe I'm just being a little cautious because of the Mobileye earnings and the read-through it might have for LAZR next week. But this looks clean. This looks like a clean breakout of the 20 DMA, and you have your targets up there at 7 plus. All right, INFU, another Tuttle Trades idea from Chris Tuttle along with CYH for this week. And this had a strong close to last week. Friday was Russell Rank Day. So now certain stocks are locked in, or at least going to make the preliminary list, but some are locked out, for example. I don't know if you get locked in, but you can get locked out. So, for example, XXII is locked out because they were below $1 close on Friday on Russell Rank Day. And INFU is one that could now make that list, that preliminary list, which will be communicated in a couple weeks, like mid-May. I forgot the exact date. So that date will be communicated, and that may be part of the reason we had buying at the end of the last week. It's bouncing off these key moving averages. You have targets of like 960 and 980, 980-ish over here at the top of that candle, 982 on INFU. So I still like this one. It's a little very kind of tough to trade because there's not a lot of volume on that. Very, very light volume, but the chart still looks good. I think the catalyst still looks good. And oh, by the way, as a reminder, ATOM, part of the reason you're seeing a lot of this strength, according to Dan Carlson, is that they were going to miss the Russell most likely. Cap at 190, it's very possible that they will make the Russell, at least the preliminary list on the Russell. That's another catalyst that's driving ATOM up. So I really like ATOM because of multiple stack catalysts. Look at that, 66,000 share bid on SOFI. Man, am I going to miss this app when they retire it. This is the best app out there for mobile. It's unbelievable. All right, so what idiots Schwab is, right? For turning this, shutting this app down. They're ridiculous. All right. All right, let's go down to next. VTSI, we interviewed the CEO last night. And let me just put this in case you're watching the replay here. The replay is available for VIPs only at StoryTrading.com/app. And I'm not going to tell you what was said, but it was good. I liked it. I saw some good nuggets in there that increases my conviction in VTSI. Let's just look at the levels here. You have support at the 200 DMA at about $5. What happened to the 20? Did it break below the 20 DMA on Friday? Wow. Might be a gift. All right. So broke below the 20 DMA. So technically, yeah, 493 to 5 is possible. Support next. And then definitely in a choppy kind of zone here. What's this support level? 5. This top of this candle, 522 might actually be your support right there. That's actually a good support level. Might not get the 5. So I'd say like 522 and then 5 are your two support levels. And upside, I think this can be a multi-bagger. It's in my IRA, long-term account. I think it's something that could be return you 2-3 times your money. Timeline, we don't know. They got to execute, okay? Earnings are going to be May 14th. It was just announced this morning. DRIO, we interviewed the CEO, the president, last Wednesday. So this is one you can see the recording again at StoryTrading.com/app. And I like that too. And there were some nuggets in there that are promising. So to the upside, you have 20 DMA at 368 or so. And the downside is going to be your 52-week low, newly set last week at $3.18. What kind of volume? No, only 5 shares volume on that this morning. So DRIO on watch as well. XXII, I've given you this. This has been on our swing sheet for a long time now. 70 cents is the support, 80 cents resistance. That's all. And if you break 70 cents, obviously you can make it down to the lows at 61 cents. And again, the thesis here for me, I think a lot of the shorting is over because it was already anticipated they'd be removed from the Russell. I think a lot of this shorting was related to that. Now it's official. They're going to be out of the Russell. So I'm not sure there's tremendous amount of incentive here to continue shorting XXII. So pressure to the upside is my thesis on that 80-cent target. PERI's been a disappointment. Let's just check Microsoft because this is a play on Microsoft and Bing market share. So Microsoft holding all its big gains, and PERI really hasn't moved yet. So I still like it, but let's just review the levels here. About $33 or so is going to be your support level. And then your resistance level is going to be 2 of them, 36.80 and then 38.30. Okay. If you want to get a little more granular, because if you like the thesis, which I do, I really like the thesis, and I'm like a little bit surprised it hasn't moved. When is the earnings report on this? Okay, May 3rd. Okay, so you got to be careful of this because earnings are on May 3rd. All right, is it before or after the close? Let's see. Here we go. It's going to be May 3rd before the open. Okay, May 3rd, Wednesday before the open. So you do have a binary risk event there to be careful of. But the thesis is really strong here. They do the ad tech for Bing. So as Bing gains more market share, they make more money. All right. So Wednesday before the open on PERI. A couple other news items out there. GANX this morning. This is on our radar because Jason Assad gave us an idea here, especially after he really liked this after the PRV that Sanofi bought PRVB, and he had rotated some of those big winnings out of PRVB to GANX, and is like GANX is next to get a big pharma deal, whether it's licensing or being acquired, and it's been riding up to 20 DMA. This is the Michael J. Fox Parkinson's disease drug. And this morning it got a upgrade, maintaining a $10. It was an upgrade. They just maintained $10 a share. So $10 a share by HC Wainwright as it holds a 20 DMA. And I'm combining that together with the opinion of my colleague and friend Jason Assad. So because of that, I do like this at the 20 DMA. And, we'll see. Maybe buy it at the 20 DMA and you just wait and see if news hits and then maybe sell it much higher. So that's GANX. Tractor Supply Group, just want to let you know, I'm not going to spend too much time on this, but they got a couple upgrades this morning. There's an agriculture stock. Their earnings was a slight miss last week, so you can see it pulled back from like 250 to like 235. Now it's bouncing back, and you got a couple of analysts defending them this morning. Oppenheimer and CFRA raising their price targets, even though they slightly missed, obviously. And so something you can look at. I'm not going to provide too much analysis on this. You can see the levels, right? You can see the 20 DMA 240, and you can see your support levels there. All right, two more, and that's it. Maybe three. I'm running late. Okay, DermTech. DermTech here. Let's see. They have earnings on May 4th after the close. So May 4th after the close on DermTech. And let's see what they report. Okay, I'm not I just put this out there because it's been going down. A lot of times we don't really look at stocks as they're going down, and maybe that's a mistake. So I want to keep tabs on something that's out of favor. Maybe you can pick it up at support levels. But DermTech, for me, it's really about what's on the earnings, what happens on the conference call. If you want to take a risk going to the conference call, it's up to you to do that. But the conference call, I really looking for signs for all the healthcare plans that are now covering them. We want to see that translating into revenue. We want to see that translating into scripts written by doctors. That really hasn't inflected yet. But it does seem like the healthcare coverage has inflected, especially over the last 2 quarters. And this is why you see the stock, really this whole move from $2 to $6 and now $3 is because of this big momentum they've had in healthcare coverage, right? So is it only simply a matter of time that the doctors will start prescribing this patch to test for skin cancer non-invasively, or is the data not good enough and the doctors won't be convinced, or there's too much resistance in the dermatology industry for them to try something like this? We don't know. But this is something to really watch, because if you see evidence of sales inflecting on DermTech, this can be not only a 5 or 10 bagger, it could be a 20 or 30 bagger, or something really huge. So keep that in mind. I mean, the market cap's like nothing, 94 million. And compare that to the market cap of Exact Sciences, multi-billion, and similar kind of idea if it takes off. So in any case, all right, we're watching RUM. They had the short report last week. This is just something, it's always going to be volatile. I think it's something that you can trade the volatility, you can sell puts when it drops, et cetera, et cetera. The earnings release is going to be coming out sometime soon. When is it? It's not this week. All right. It's not pulling up on my stream right away, but keep that in mind. All right. I'll let you know maybe on an upcoming show exactly when the earnings are, because I can't find it. All right. But it's not this week. All right. I said next week or two, I think, is going to be the earnings report on Rumble. And then, all right, that's it. Tesla, I just want to note, Tesla's a little weak this morning. It may be related to some data out of LI Auto in China that they're beating them in some categories or something on some EV vehicles. Some good data out for LI, maybe not as good for Tesla. And you see LI over the 200 DMA. I'm not playing it. I don't know it well. And with that, I'm out of here, and we'll be back today at 4 p.m. We're going to do a post-market wrap with Ascending Capital. Thank you for joining us. I'll see you soon.